What is going on YouTube? Hidden back making another brand new Crypto TV episode. In today's video, we're going to be looking at Litecoin, Bitcoin, Ethereum, as well as XRP to US dollar. We're also going to be looking at the current coin market cap as well as DueDEX. Specifically in today's video, I do want to discuss a couple of different things compared to what we've been discussing. Specifically, I want to discuss a few key terms in relevance to what exactly I plan or see happening or foresee happening within cryptocurrency, Bitcoin, XRP, Ethereum, Litecoin. Specifically, as you guys know, we've been discussing this. It's been a long journey and we're finally starting to get close to filling the gap, and that is a key term that I feel like a lot of you guys might not fully understand, but ultimately there's not much more room for a lot of these coins to move to. Like Ethereum, XRP has till here, Bitcoin is pretty much at the top. We have Litecoin, really not much more movement for these cryptos to move, and that is what I want to talk about in today's video. Otherwise, if you guys are new to the channel, definitely make sure to subscribe, turn on post notifications, leave a giant thumbs up, follow me on Twitter at CryptoVOfficial. This way, if you have any questions, comments, or concerns relating to cryptocurrency, the current market, trends, things like that, anything you want to discuss, you can DM me over there. Otherwise, let's jump into today's video. So yesterday we left off discussing biggest XRP and Bitcoin price jump you'll probably see. And you can see the thumbnail pretty much is a dead giveaway of what I am referencing. Yesterday, you can see this is a Bitcoin chart. We're pretty much at the top of a big Elliott wave formation. And I drew out what appears to be a fairly conservative view of what I think is going to be happening in the future, as shown. I do believe we're going to see a few months of bear market before we reverse back to the upside. Ultimately, this does come with a few interesting key terms that I would like to discuss with you guys. But first, I do want to give a huge shout out for everybody that is supporting me on Patreon. Yesterday, I just checked. We literally hit 130 patrons, which is absolutely incredible. We have a goal of 120, and basically I created, or for those of you that don't know what my Patreon is, it's basically for the Bitcoin traders, XRP traders, all three, Bitcoin, XRP, Litecoin, whatever it is that you have an interest in. I even have the Crypto Loungers, Crypto TV Platinum, and the best beginner crypto course for you guys that are falling behind and don't really understand what my videos mean. This is where you would get the general understanding of how to actually figure out the key terms, the specific things on the channel, such as trading long, trading long, trading short term, buying long, selling short, stop losses, everything under the sun you can possibly, think of, market orders, limit orders, leverage trading, everything like that. Everything is on my Patreon. So huge shout out. There's a link in the description to my Patreon if you wanted to check that out. But specifically, I wanted to discuss a few interesting movements, specifically these gaps that I wanna show you guys. But at the moment, the current coin market cap again looks like more flatline. It's except for the dip that we saw like 4 days ago, the market's been flatlined out. I mean, this can get fairly boring fairly quickly, and I totally understand you guys, but I'm trying to create daily content. A quick summary in 10 minutes, everything you would need to know without having to actually look at all these charts, because I do it for you. So specifically, we've pretty much seen flatlined out movements, flatlined out sideways trading. We dip, we come back up, we trade sideways. It seems to be the pattern on pretty much all the top 10 cryptos. But specifically, when you focus in, you can see, for example, XRP. By the way the charts look, and there is due reason as to why they look like this. You can see if I just zoom out ever so slightly, the weekly chart looks like there's a downtrend, a descending triangle, and this is two supports. You can see this is the first support, which has been pretty much found back in 2017. And then we had a bottom support, which is closer to a price of 14 cents. So it goes from 18 to 14. And this is pretty much a trading channel. We haven't actually seen prices this low until this year, when we fell all the way down to 14 cents, which was incredible. We actually set an all-time low all the way down to 10 cents just a few days after this area, or the same day or week, sorry. We fell all the way down to there, which was incredible to see an all-time low on a cryptocurrency, at least for me, in regards to a coin that's literally trading at, let's see, number 4 now on the top 10 cryptos. The fact that it's number 4 is still incredible to see that it's setting an all-time low, but that's interesting. But we've come back up from that, and you can see it looks like we're closing a gap here. We're filling this gap. Obviously, with these trades like that, it was kind of fairly easy to predict with the downtrend that we would head lower and lower. Ultimately, filling the gap right here and getting wedged into this with the off chance we break bearish and fall down to 14 cents, we'd consolidate in. But what does this mean? What does us hitting this level right here mean? I don't get it. So if you're asking that question, I did pull up a few things. So we have 4 key terms: the breakaway gap, common gap, exhaustion gap, measuring gap. The breakaway gap is seen when price makes strong directional move from an area of consolidation. It is particularly powerful for traders when combined with clear patterns on the chart, like trading ranges and ascending and descending triangles. As we do know, this to me is a descending triangle. What is forming here on XRP, the downtrend, we're forming in a descending triangle, and we're trading now flatlined out into a corner. So ultimately, it then says a low volume move creating the space is more likely to see price returning to the area. Bottom line, breakaway gaps are less likely than other types to be filled. So it's very interesting, but it says it's filled with significant volume after the gap is a sign of a strong trend, and it's unlikely to be filled. So it's very interesting, but ultimately volume is fairly low at the moment, but there very well could be a big explosion of volume because the sideways movement, the uncertainty, could ultimately lead to a big break. We've seen things like this happen on Bitcoin. This was more of a downtrend, but ultimately, right here, this area, this sideways consolidation, the trend trading sideways eventually led us to break bullish, and we shot all the way up. Not very rapid, but it did see that big move happen. So ultimately, then we have other trades: the common gap, also known as area gaps, pattern gaps, temporary gaps. These are gaps that traders see most often in trading ranges during sideways movement. There are all often filled, but offer very little information on what price is likely to do after this occurs. So ultimately, when we see gaps form, there's 99% of the time sideways trading, uncertainty, little movement in the markets, and then they pop in some sort of direction with big volume. But as it explains, common gaps are very hard to figure out. They're very hard to track which direction they will break post the sideways trading. An exhaustion gap is a type of gap that is viewed as a signal that a trend is ending and that a new pattern or trend is likely to occur. It says the final attempt to hit new highs or lows. Exhaustion gaps generally occur in an area of rapid advance or decline. So we're not really seeing that at the moment. Often a large move straight up or down, they are normally preceded with a heavy volume spike and often foreshadow a blow off the top in an uptrend. And lastly, measuring gaps, also known as runaway gap or continuation gap. The gaps occur in the middle of a price pattern and signal a rush of buyers and sellers who share a common belief. Now, I don't think I've seen these, but also this is on, I believe, Cointelegraph, so if you wanted to check that out, go for it. But ultimately, what we're starting to see is the uncertainty. And as it explained, it usually ends in big pops. Whether you want to categorize this one of the 4 is up to you. But ultimately, we're going to see a big pop in volume very soon as we fill this gap and we complete what appears to be a downwards trend. Ultimately, we're going to see this break bearish and pop all the way down into the 0.07, if not, I'd say closer to 14 cents. But if we somehow surprisingly break bullish, we could see an immediate correction all the way up to 70 cents. But the reason I'm straying away from a bullish break on XRP, and I know it's unfortunate, but let me know what you think down below or on Twitter or on Patreon if you have an ideal or an idea or belief. Ultimately, when you look at the other cryptos like Ethereum, although Ethereum does look fairly bearish, as it does have a gap here. We have an uptrend, we have a resistance. We're slowly coming into the middle here or finishing this up. Most of the cryptos seem fairly bearish. Litecoin seems fairly bearish. Bitcoin seems extremely bearish. A lot of these cryptos are now back to trading pretty much at 50 on the RSI. That was Litecoin. Bitcoin is at 47. Ethereum is at 52. XRP is at a little bit lower, actually, at 40. But ultimately, all these cryptos seemingly are flatlined out once again on the MACD, on the middle moving average. We do have a bearish break on most of the cryptos on the MACD, But ultimately, we have to figure out which direction we're going to go to. I am a full force believer and will be very shocked if Bitcoin manages to break bullish. The longer we hang out at here, the longer we hang out at these prices, you can see all the uncertainty, all the wicks here. It seems like the bulls want us to stay up here, but the bears are creating a clean surface that do not want to be broken. I do believe that as the bulls get weaker, there's a very high chance it's going to pop bearish. You can see based on where these the wicks are, who's winning and who's losing. Ultimately, if we saw the wicks on the top, it would signal the bulls are consistently trying to break through resistance, and they have completed so. But that is not what's happening. Believe it or not, the bears are pushing us down. The bears are pushing us down, causing weak points, and we're trying to consolidate back up. But notice all these coins, or these prices, all these candle wicks have these massive wicks. All these candles have these massive wicks, and I believe the longer we hang up at the top here, the bigger the break to the downside will be. Ultimately, we were nearing overbought oversold only, I think, on the 15th, so just 4 days ago, and now after a long-term consolidation, you can see what is kind of happening here. We came back up. We're now fully trading at the middle moving average, which is great. Ultimately, having retested this middle moving average here, there's I think a fairly high chance we're going to break bearish. I do know that we have a big bullish cross on the moving average right there, but these flip around so freaking often. You can see we crossed it here and went right back over. So it really doesn't take long for this, especially how close it is. But I do believe there is going to be a reversal period, and I do believe that Bitcoin, after setting all of these bearish wicks, especially after the weekly candle, has seen such crazy movement, very similar to what we're seeing here. That's kind of why I'm referencing that probably the same move is going to happen. You can see right here what exactly I'm referring to. Ultimately, it seems like there's about 3 candles before the big break, and I think we've just completed that. I would consider this to be the first. This is the first. Then we have the big red reversal indicating the top, which is right here, and then we have this long wicked out candle which shows a very long bottom end and a very short top. Same thing is happening right now, very long bottom end, very short top, and then ultimately the bears hit as of next week. So we do have 2 days and 13 hours to pretty much decide which direction we're going to go. But if Bitcoin does decide to break bearish, which I ultimately do think it will, and we will go into a fairly dormant bearish month, there's a fairly high chance you're going to have to get ready to short. In order to short, it's on DueDEX. Check it out. Link is in the description. This will allow you to sell short, and you can see I have money available in my account getting ready to trade on Bitcoin. You can see as we once again retest the top resistance here, there's going to be a fairly high chance we're going to see this. This is what I'm expecting to happen right now. So keep your eyes sharp, keep your mind open, get ready. Make sure to enter the giveaway on it's in the description down below. We have now 1,200 people entered in the free $200 Bitcoin giveaway. So make sure you're in it to win it. Otherwise, follow me on YouTube. Subscribe to my YouTube channel. Drop a thumbs up, turn on post notifications. Follow me at Twitter, CryptoTheOfficial, and I will see you in tomorrow's episode. Peace.